so deeply about that.
Yeah, neither did I actually. I don't know. I don't ride a bike, so I don't know about loyalty
Anyway, you will
towards
have
tires.
something to say on the other bike maker, TVS Motors.
Yes, in fact, you know, we were speaking with Amit Dalal yesterday, and he said, I hit my head every time I see the miss in rally that I missed out on in TVS Motors. I mean, the stock move has been phenomenal, and it's been one of those turnaround stories. So 3 quarters now of very good operational performance, and it's narrowing the valuation and the margin gap between its peers. If you look at the margins that TVS does, I mean, it did about 6.4% margin. That's compared to Bajaj, which does 20%, and Hero, which does more. So there's still a long way to go, but this is a turnaround story. And like an analyst pointed out, FY15 could be a watershed year for TVS because of its new launch, the Jupiter in the scooter category, which is doing exceptionally well. So it's you know, sort of turned the story around for TVS. But just quickly onto what the management said yesterday. They said demand outlook is strong. 8 to 10% industry growth is what they're expecting in FY15. They have a couple of new launches. They'll launch the motorcycle Star City, and they will refurbish the new Victor as well. And they have a new scooter called Zest, in case you're interested, to buy as well in FY15. And they've got a very good response to the new scooter Jupiter, so that will help in terms of
I'm interested in
market share.
anything from the south. It's not just TVS that's ignored. The northerners ignore. Ashok Leyland, they ignore. Shobha developers, Prestige estates. I mean, the best come from the south, don't they? All right, Pragya, before I get carried away, are shoppers shopping? What shoppers stop saying?
Well, they don't seem to be shopping that much, and really it's the costs that have taken a beating, and that has resulted in a very poor profitability for the company. In fact, if you see, the profits are down by about 47% this time versus an expectation of about 18.2 crores. Management has delivered a profit of about 8 crores. As far as the top line goes, a fairly healthy quarter for them, 18% growth on the top line. But remember, this has to be seen in the light of the fact that the discount season or the sales season was actually extended and had continued into a fair bit of period for this quarter, so that could probably come in from there. But the company's seen a fair bit of addition in the new stores, and remember, these new stores really drag on as far as losses are concerned. They're not really profitable till about 2 years of their operations, and the company's seen about 30% increase in employee costs, 19% increase in lease rentals, 18% jump across its admin expenses. So really it's that's what's led to a poor profitability. The other factor is the fact that while same store sales growth on a blended basis has come in at about 8%, this is likely to moderate into the next quarter once this whole sale effect goes away. The other important part is Hypercity continues to make losses. This time the same store sales growth at a negative 7%. We were expecting this number to come in at a low single digit, so that is a little bit of a shocker. Very disappointing numbers from Shoppers Stop this time.
Okay, now we know why you are in blue. Lata, you are as well. So IOB, the terrible numbers today.
Let me start by saying I'll eat my words on southern companies. This south-based bank and overseas bank, very bad numbers. I mean, somebody was asking 356% rise in profit. Oh no, that's not the way to look at it at all. Actually the operating profit is 1,200 crores, thereabouts. And after that they have taken provisions of over 1,200 crores. So actually it's a loss of 13 crore. But why is it showing a profit? Because, the money you set away for a rainy day, what you call counter-cyclical provisions, floating provisions, all good banks have them. ICICI and Bank of Baroda and HDFC Bank have oodles of them. A third of that can be taken away on a rainy day, and that's what they've done. They've taken 324 crores of that, and no, that should be 12,004. It's not. It's not 12014. It's 1204 crores. The provisions. But anyway, the point is because you've taken the 324 crores from your rainy day kitty, your profit is you're able to show a profit. But otherwise, I mean, the numbers are not much anything to write home about. Your provision coverage ratio has fallen, albeit by just 2 percentage points. Net interest margins have fallen by 13 basis points. Slippages are actually, the incremental bad loans they've created is actually 2,275 crores. But because they sold off 1,700 crores to the asset reconstruction companies and did a very good job of recoveries and upgrades, the net number doesn't look that bad. It's about half the number that they actually created. But even then, look at the gross NPLs. After all these write-offs and sale of assets, the gross NPLs are down by 2%. And as a percentage, okay, it's fallen from 5.27 to 4.98, but 5% is not anything to write home about. So bad numbers.
All right, so expect a downtick there. What about Shriram Transport?
also subdued. Again, one of those southern companies, yesteryear's bluest of blue chips, very subdued. But I guess in this case, you have to blame more the industry than the company itself. Look through the numbers, the profit is down 17%, net interest core performance is down 2%, operating profit is down, other income is down, trading fees are down. Across the board, there's nothing much to say. Net interest margins are down by about 5 basis points. So it's really a very flat performance. Asset quality, quarter on quarter, they've generated 5% more of bad loans. Well, you may say the green shoots are disbursements have picked up. Quarter on quarter, they have picked up, and especially in new CV disbursements, quarter on quarter, new commercial vehicles that they have sold is up 82%. So, that's the good news, but will El Nino spoil the fun? We don't know.
And last quarter was the one that really sparked off the huge downtick in Shriram, right? We had seen that big fall as well.
But then now mining has resumed, so maybe there is some bit of activity. Perhaps the worst is over in Shriram. The disbursements is that, ultimately stock price has to discount the future, and if the new disbursements have picked 82%, I would think that perhaps the worst is over for Shriram. But that's a hope. El Nino can wash it away.
All right, let's talk about that big lemon yesterday. JSPL closed down 7% post its numbers. Nigel, what are brokerages saying? Are they all asking their investors to sell the stock at this point?
So it depends on which way you look at it, actually, because I've got a couple of brokerage calls that are in, and I'll tell you what, Morgan Stanley, they're not very excited with their numbers. They have an equal weight on the stock, target price of around 227. The big miss for them was because of their steel business and also margins of around 25%. That's one of the worst they have ever seen. Also, they expect the profitability in the near term to remain lackluster, and also they believe that in fact the price to book value of around 1 times, that's what will support the stock. Meanwhile, UBS, they have a sell on the stock, target price of around 225 odd. They expect this weakness to continue into the first quarter. That's because of the Raigad unit, and they expect profitability to be hit all the way till June 2014 odd. Going ahead as well, the evacuation problems with regard to the power business are likely to hit the stock. But Macquarie, they have a different take on the stock. They believe that it's going to be an outperformer, target price in excess of 350 odd. They believe the valuations are very attractive, and also their target price of around 358 valuates the stock on a PE basis of around 8 times odd. So they believe that the EPS currently, that's at the end of FY14, was around 20 rupees. They expect that to double and to come in at around 45 rupees in the next couple of years. And also they view the stock as very, very attractive at current levels. It's trading at around 0.9 times price to book value and at a sharp discount to its peers. So they are advising investors that any kind of weakness to go ahead and buy into the stock. Back to you.
Thanks for that, Nigel. Very good numbers from Thomas Cook coming in, almost a 4-fold jump in profit and in income.
Well, that's huge, actually. Total income 481 crores versus we need to find out more. Net profit at perhaps.
No, both are up 4-fold, but we'll really have to check.
I think there might be some restructuring. I think the numbers might get restated. So let's just wait for that, I think.
Yeah, let's just wait for more on that. But let's quickly recap our list of top 10 stocks: ICICI Bank, Bharti, Federal Bank, Sun Pharma, CEAT, TVS Motors, Shoppers Stop, IOB, Shriram Transport, and